The mortgage pre-approval is one of the most overlooked steps in the home buying process. I'm going to tell you all about it coming up in this video right now. What's happening, everybody? It's Huddy. We're talking about the mortgage pre-approval. Another term that you might have heard for it is the pre-qualification. What goes into that? Why is it so important? And what are some mistakes that people make when they're looking at homes during this process? That mortgage pre-approval is super important. A lot of times people get excited. They're thinking about buying that first home or even the next home, and they're looking online, they see a house, man, that looks good, and they have that convenient mortgage calculator right next to it, and oftentimes they already have it pre-filled out to make that payment look super attractive. And that gets people going down the rabbit hole of thinking they can afford a house that, well, maybe they can't. And that's the idea of those mortgage calculators, those ones that are next to the house. They're going to automatically put in a 20% down payment. They're going to put in a very low cost for insurance. And oftentimes the property taxes, they're not super accurate. Same with the rate that they're quoting on that mortgage calculator. So it's set up, it's not necessarily misleading, but it's designed to make that house look affordable so they get more clicks and more people interested into that property because they're making it look so affordable. So that pre-approval process, the informal application, if you will, that's where it all starts. We're going to get basic pieces of information to start with. Usually this can be done online. It's right on my website. It takes about 7 to 10 minutes. A couple of things that we're going to be getting from you there. Obviously your name. We're going to be looking for your date of birth, social security number so we can pull your credit. I'll get to what that really means in a minute. We're also going to be looking at your employment history. You don't have to have the same job for 2 years, but we are looking at your history. So don't be afraid if maybe you just graduated college and you just started your new job. That's okay as well. But we have to fill in that employment history and look at what you're making each month. We're looking at your gross income. So not what gets deposited into your account, but what is your gross? So if you're hourly, what do you get paid per hour versus, how many hours do you work a week? And overtime, that's a factor as well in this employment information. Maybe you have some bonus or you have some commission that we want to factor in there. The other thing that we do look at too for income is if you're a single parent and you're receiving child support or you're getting Social Security income for yourself or for your children. Those are all things that we look at when we're factoring income to get you pre-qualified. We're also going to be now looking at assets. So how much money do you have saved for a down payment? This is also crucial because just because you don't have a big down payment, that doesn't mean you can't get qualified. We have several different programs that I'll get into in another video, but for a lot of people, they can get into a home for 3% down, 3.5% down, or 5% down. So you don't need a large down payment, and there's also down payment assistance programs. Again, I'll cover that in another video with what that looks like and how you qualify for those as well. But that's why this part is so important to be accurate, because if we have an accurate application, then we move to that pre-qualification phase. This is where it gets fun. Okay, so we've got all that information loaded up into the system. We're going to ask to pull your credit. I know it's super scary because maybe you're worried about your credit a little bit, maybe not, but you're worried about the inquiry and, oh my gosh, what is that going to do to your credit? Well, I'm not going to talk about FICO and Credit Karma, the differences right now. Just know it's a FICO credit score that we're using. And in the world of FICO, that inquiry is only going to hit you 1 to 2 points on average. The reason for that, in the FICO algorithm, a home loan is considered a good debt. So they don't hit you that hard on that hard inquiry. We got to see it anyways. So it's important. Let it rip, tater chip. We got to have that. So We get that part done. We see your scores. And again, people are so worried about their credit scores and that they're not going to be able to qualify. Well, I've done loans for people with scores under a 580. So if you think you got to have a 620, a 640, a 700 in order to qualify for a mortgage, don't be afraid. Just do it. The other thing is, if scores are a little bit low, that's what a good loan officer can do, is they can help you get your scores up without you having to guess. So a good loan officer will help you figure out if we need to get scores up, what exactly you need to do in order to get that done. So now we get to more of the fun part, the actual steps it takes to get to a good pre-qualification. I mean, anyone can just look at your information, see what you've put in, and say, well, this is about what you're qualified for. But in any market, whether it's a buyer's or a seller's market, but especially in a seller's market, like one we're experiencing right now, that's not good enough. You want to be able to go look at houses and be confident that you're going to be able to make a good offer and close on that loan. Any good real estate agent is going to ask you that. Have you really been pre-qualified? And that's a big difference between working with someone local or that you know that you're referred to and trust versus an online company. They're not bad, but they kind of get lazy sometimes. That's what I've experienced. The first thing that we're going to do is we're going to send you a list of things for you to upload or to email directly to us, or you can drop them off depending on where you're at. And the reason why we want to do this and what we're asking for specifically is we're looking for tax returns, W-2s. If you're self-employed, we're going to be wanting both your personal and your corporate tax returns, pay stubs, bank statements, your driver's license. We need a copy of that. We're a financial institution, so these types of things are very important and it's secure. We're looking at your income with your debts. That's the other thing we get with that credit pull, is we're going to pull in your debts because we have to measure those against your income to show what we can get you pre-qualified for. The longer that you take to upload those documents, the longer that pre-approval, that pre-qualification process is going to take. You can't just wing it and send us a pay stub and we call it good. We need to see everything, because oftentimes you get excited in this process, or maybe you're a little bit nervous and you want to hurry up and do it, but you leave out some sort of documentation. And that documentation can make all the difference in your pre-qualification. Social Security award letters, pension benefits, VA, veteran benefits. You know, if you're working overtime, we want to see that, or your bonuses. All that stuff matters in your pre-qualification. The other thing that we talk about too is we want to go over your debts. Maybe you're getting rid of a car, or you just got rid of a car and it's not showing up yet. Those debts factor into your debt to income, which I'll get through all that in another video. I know we got a lot of other videos, but all that, we got to take all that into account. So that's why once we get those documents, we get your income dialed in, we look at assets, down payments, we talk about that. That's what we do next. So once I get all your stuff, you've sent it all in, you've done a really good job, and we get it lined up, we talk over the phone, or you can come in, or video, whatever works best for you. And we go through your application. We make sure we're not missing anything as far as your income goes, your down payment, where is that coming from? Because if it wasn't listed, if you didn't send in a savings account or something like that, or maybe it's a gift from a relative, or maybe we're talking about down payment assistance. So we're going to be talking about those things over the phone, and we're going to be talking about what your payment looks like. We're going to verify all your debts are reporting accurately to your credit report. So we have all of those things factored in. In today's world, I run into this all the time. And why this is so important is because a lot of times a parent maybe has co-signed for a kid on a car payment or student loans. Now, student loans are a little bit different because a lot of them are deferred right now. But let's say you did co-sign for a relative, a kid, a cousin, a brother. You're trying to help them out, so you co-signed. and that debt is reporting against you. Well, we want to find that out, because if that other person is making those payments using an account that's not connected to you, if we can document those payments coming from that person, we don't have to use that against you. So that's why this pre-qualification is so important. So we've done all that. We've looked at your debts. We've looked at your income. We've talked about what you're qualified for, what that payment looks like. Now, when you're going out and looking at houses with your real estate agent, well, now you can offer with confidence. In my next video, we're going to be talking about the mortgage payment, what goes into it. So we're going to talk about the principal and interest, taxes, mortgage insurance, homeowners insurance, how to get rid of mortgage insurance, and what exactly is all that stuff. That's going to be in the next video in this series. Well, thanks for checking out the video. We'll see you at the next one.